Jamie here, JB here. Hope everyone is doing on Sunday, Monday, April 14th, 8:58 on this fine morning. Talk quick about the market. Some names I'm looking at go from there. S&P futures up about 1.6%. Expecting another choppy session. I guess better than having some kind of situation like last week where you worry, you wake up and worry if we're going to be a limit down or limit up. I mean, who knows? It's like a flip of the cards what the market's gonna be the next day. But interesting developments on Friday. I guess Friday evening. I guess there was some document that came out that showed that the tariffs were going to be exempt on electronics, computers, phones, televisions. Um, from China, right? So I guess that was already out there, but it wasn't published, right? And then that document came out, and then over the weekend, the administration is trying to clarify, right? Because they're like, oh, wait a second, who knows if they even know that was coming out? I mean, the way it sounds, but anyway, so then. It looked great, and then Sunday you had what Commerce Secretary come on and say, "Oh, we're going to be over the next couple months looking to levy some more tariffs on those segments." Who knows what that looks like? Then you had POTUS coming out later yesterday saying no one's off the hook, right? So anyway, for now, it looks like the 20%, which was initially announced back when the auto tariffs were announced on Canada and Mexico, that's kind of the flat rate right now. Um, it's funny to me, like I was last week. I don't know if I was talking on Rant, but it's like I was talking about Tim Apple. I call him Tim Apple just because he's Tim Cook. It's because it's funny that you have anyway. So you would think that there would be some kind of comments, right? So you're the biggest, you're $1 trillion company, and there's no comments around the tariffs in regards to your product, right? That obviously to be some serious impacts if there's 100, if the tariffs are hitting your company, right? So to me, and then I was talking about that $500 billion investment that Apple's doing in the U.S. You would think there'd be exemptions, and there wasn't. So that was always like I was always like, huh? It didn't like jive. And now you see maybe there were exemptions, they just weren't announced, and then the announcement doesn't even come out as official. So all is just another line of this, zip back and forth thing that Royals, just the markets. It's like they don't care what the markets are doing. So bodes well right now for the tech sector. You see Apple and some of these other names uh, doing bouncing this morning. Hopefully the gains hold over the weekend. All it is about headlines and articles. All you read is how the tariffs going to impact how the economy, the the lack of luster for U.S. right, for the dollar, for the treasuries, for investments. How is this trade war and the tariffs impacting the perception of these economies for the U.S. And supposedly the treasuries in the U.S. dollar are like a proxy for that sentiment that people are scaling back investments. I maybe that's a longer term thing. For now, it just plays into the narrative, right? Of hey, the U.S. is going to get its debt downgraded. We're headed into recession. And if I put on the watch this morning too. If you talk to 10 people, 5 of the 10 people would say that the economy is going into recession. The U.S. is going to default on their debt. Bad days are coming, and then the other five of the 10 people say the market's on the next leg of its of boom, right? The economy is going to boom. So it's funny how that all works. We'll see how things play out. For now, the data is good, right? And until that changes, we do have the soft data, the consumer confidence, that came out again weak. So until that plays out, I don't think I'm kind of in the camp. I'm not saying market boom, but I think we're not headed to a recession. But if we continue to slap 100, there's no if the trade deal is not rectified, if there's not deals done out with the EU, Japan, Vietnam, and China, that it's like a foregone conclusion. I just don't think that's going to be the outcome. All right, so that's kind of overall market. This week we get Fed Chair Powell 1:30 Chicago Economic Forum or something. I think he does that every year. That's actually live stream. I'm sure he's going to make some more comments, so that'll be something to watch. We do get earnings this week. We had Goldman Spectacular this morning. Tomorrow, I think, is Morgan Stanley and maybe Bank of America, or yeah, I think it's Bank of America. And then later, Johnson and Johnson. Then Thursday, after the close, we get Netflix. Ironically enough, Thursday is pretty much a Friday because markets are closed on Friday. So I put Netflix on the watch list this morning. It's almost, to me, it almost feels like sell the news. Everywhere I look, it's kind of like the same sentiment I had a couple of weeks ago when the markets were tumbling and Netflix was strong. It's like a name that I think is, I wouldn't call it 100% recession proof, but I think it's going to report great earnings. And I don't even think it would take a while to me for the for the growth and that story, the growth story to come out of Netflix, because I still think they have great content. They're still growing subscribers. They still have an international scale that's being built out. So, but at the same time, I think it's almost going to be like a sell the news, similar to what happened last year when they reported monster beat and raise, but then they announced that they're going to stop reporting monthly and quarterly subscriber ads and average MAUs. So it just, I have to, I don't know. So I'll probably stay away from that. All right. So that's kind of overall market. Also, of course, still watching. So we'll watch Fed on Wednesday with Fed Chair Powell 1:30, and then watching yields in $1, right? It's one of those, I wouldn't even call it a self-fulfilling prophecy, but kind of like that story narrative's created. And now it's watch the yields and watch the US dollar, because those might be a snowball effect of a point of no return, right? If the people at B, and maybe, people are saying the reason the yields were going up and treasury being sold because people have equity positions and exposure they had to roll off. Others are saying it's because, China is trying to get back and pressure the US. That's another. Um, you know, Japan has, $1.1 trillion of US debt. Maybe it's that, but definitely, needless to say, that's certainly something to watch. And then also the US dollar, right? So it's funny that we slap in these tariffs on countries, a 10% baseline, but the US dollar's down over 10% since the start of the year. So if you're importing, if you're trying to buy imports as a manufacturer or something in the US, and you're getting components or what have you, they're 10% more expensive already. And that's without the 10% tariffs. So now you put the 10% baseline tariffs. So it's already a tough environment. All right, so that's kind of overall names. That's yields. This is US dollar. And then individual names. So of course, I'll keep talking about GameStop. I just feel like it's more, it's on the cusp of just continuing. And you take a look at the chart of GameStop, it almost looks like it's getting semblance of like some getting well bid, like it's slow and steady to the upside. And of course, I would love to see it squeeze, but I think it actually bodes well if it continues just to have these 3, 4, 5% strong days, be well bid, and then I think it really starting to break out. And you got to look. I think it was 29 and change was the level hit after its earnings and announcement of becoming a possible Bitcoin treasury asset, or allowing them to purchase Bitcoin. I think it just keeps heading higher. So on Friday, I still had April strikes. Only 4 trading days this week. I didn't want to be a spot where there's some kind of negative news or catalyst, or we just have continuation and the market sells off. And GameStop, it wouldn't matter if whatever it does, it's going to sell off with the rest of the market, or it's been holding up surprisingly well, but at some point it would. So I didn't want to be in a spot to lose the profits. Closed the last of my April strikes in for close to 50%. And then at the end of the day, the premiums were still elevated, and there's some huge call buying going in. So I think that helps the implied volatility. So I got out some of my May strikes for nearly 100%. I'll just hold the rest of those. And then I might start looking for some, I wouldn't call them FOMO, but some crazy calls like the July 55s, June, July 55s, or even 60s, for 2 reasons. One, maybe it gets up there, right? Some catalyst. I think he's going to continue to hold the cash hoard and use that as kind of passive income, and then do these offerings at convertible debt at favorable terms for the company to buy more Bitcoin, right? So if that happens, I think the stock can keep heading higher. So if that happens, I think even if it gets to $45, to 55s, the 60s in June, July, if it happens, especially if it happens short term, those calls will be 100%, 200%, and who knows, maybe it catches fire. So, and you start looking, some of the further out of the money strikes, later dated, are starting to really gain premium. So, I wouldn't say I want to be early because the premiums are elevated already, but I think there's still more room for upside there. So that's GameStop. And also, I talked about that 50 and 200-day moving average across. That's a bullish sign right there. So don't be surprised. I wouldn't be surprised if it heads over $30. I think it's $29.99 it hit at the end of March after its earnings. So that'd be a big spot to break. And then First Solar, it's a name I've traded over the years, and UBS and RBC just came out with analysts. I got to look at those targets, but it's a name that should benefit from tariffs, right? So there's 2 components here. And the first component is obviously the new administration. They're not pro-green, right? If you were looking for an administration to really say, hey, we're going after solar and green initiatives, this is not, technically speaking, the administration you would think you would tie to that. But on the flip side, so subsidies and all those things that would fuel possible growth in the solar sector, those kind of been put to the side, right? But on the flip side, here's a company that's scaling out manufacturing capacity in the U.S., and then it's a company that struggled because China is able to produce solar wafers at a less a substantially less expensive cost basis, and then that kills margins and competition, things like that. But now with the tariffs, you have to think that should have been net positive, but instead the stock sold off. So I think there's an opportunity there. I got some strikes into this week. If I can close them out to cover cost for 100% at the open, it's gapping up here 128. I'll probably look to get some further dated strikes for a move over that 50-day moving average of 141. I really like this one for setup, especially if the market finds some footing. Other names I didn't put on the watch list, but DELL, kind of kicking myself for missing a bottom here. But here's a name that it's fun, huge growth, buying back stock, and who knows if they come out with some kind of stock buyback news. But they got destroyed because of the tariffs, right? I think when the tariffs were ratcheted up on China last week, the news was out. It was pretty much that it kills their entire profits, right? It just kills them to zero if there's the tariffs come out on the computers and stuff. So this news, I mean, stock should trade into the 90s. So depending on what the premiums look, I don't want to chase, and also don't want to rule out some kind of reversal. So don't be surprised to get some DELL strikes. And then my other favorite names, I'm just waiting for news, right? So if there's no announcement on a deal on Vietnam, Japan, China, these names are probably going to languish. But the instant there's some kind of news, especially for Wayfair and Restoration Hardware, and a deal in Vietnam and China, these names I think will go bonkers, right? So DEC was the name I continue to look at for calls. Still have some of the 125 freebies. Don't be surprised if I add some more strikes, especially if premiums come down. Wayfair, which you keep talking about. Someone adjusted their price target this morning. UBS, I have to go look at that. Uh, and then of course Restoration Hardware. And I keep talking about the CEO of Restoration Hardware. I wouldn't call him arrogant or what have you, but he's known in the past to destroy shorts, right? By doing buybacks. Back in the day when the stock was $20, I don't know if it's split too, but there was like a 50% short interest, and I've talked about this before, but the company came out with like this crazy $1 billion stock offering, and I think at the time the stock was worth less than $1 billion, and then use that to 100% buy stock and just squeeze the shorts, and then the company was able to overcome the odds and become profitable and growth and what have you. Wouldn't be surprised if he does something here. So the thing is, the premiums are nuts, and again, 200 strikes still look expensive, but on a risk reward basis, any news, and I think it trades up over $200. That's the Netflix chart. And then last but not least, I don't want to say we're out of the woods by any means. I mean, there's a lot of things going on, but there's still uncertainty. So who knows how this whole tariff situation works out? Me, I'm optimistic. So I like to think that there's going to be trade deals worked out that's going to benefit everybody, or you would hope. And if it does, I think even just some deals get worked out, I think the U.S. stays out of recession. But if not, and especially if deals get languished, right? If we're still in a situation where we don't know what's going on with China, if the tariff thing doesn't work out, get resolved with China over the next coming weeks, you have to think we're going to start rolling back to lows again. It's just so some of that you would hope earnings is going to alleviate some of that, and I think the earnings season is going to be strong because I mean we're looking at Q1. We won't really see the tariff impacts. We'll just hear commentary. But if not, SQQQ has continued to provide great opportunities for hedges. So if we roll back today, when roll that out, 537, it changes the area. I'll be watching. If we break under that, I'll look for some possibly some hedge calls on SQQQ. And then I keep with my mantra, right? Small, keeping things small. Small becomes big in this environment. Big becomes small. So no reason to go big yet until the market finds a little bit of footing. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.